In 2026, markets don't move on narratives. They move on liquidity, policy, and incentives. That's why SolanaFloor is launching the big picture. Every week, we step back from the noise, pressure test the headlines, challenge assumptions, and map what macro, regulation, and market structure will mean for crypto and for Solana. No hype, no shilling. Pure signals straight from the experts. This is the big picture. GM. We are live. Welcome to the big picture, where we're going to unpack the intersection of macro, of TradFi, of policy, and of course, crypto and all the good things. I'm joined today by my co-host, Mr. Thomas Bahamas. Thomas, GM, sir, how are we doing today?
GM Jack, I am doing great so far today. I'm super excited for our guest today, Bitwise CIO Matt Hougan. I mean, we had an incredible convo with him at Breakpoint, and so much has changed in just a short amount of time, right? So I just can't wait to hear his takes on everything that's going on right now, right? As we know, in Solana, in all of crypto, everything goes so fast, right? So excited to see what's going on with metals, with crypto, and where Solana might be headed next.
Absolutely. As you said, we had a great conversation with him. I feel like that was months and months ago, but it really wasn't that long ago. And he's definitely the ideal person to talk to, given the sort of current market conditions we're seeing out there. So before we bring Matt in, I think it's probably reasonable and responsible for us to set the scene here, because the macro backdrop is genuinely confusing from a crypto standpoint, to say the least. Just some numbers here. Gold briefly touched $5,600 last night. Mind-blowing, parabolic, generational run, and then it absolutely nuked at market open. So that was interesting. I'm very curious to see where markets go today. We obviously know that tariff threats are back on the table. We saw that at Davos. We'll touch on Davos in a second. The US government shutdown risk probability hit 80% on Kalshi, and then it sort of dropped back down to 50%. So a bit of a coin toss at the moment as to whether or not we see a government shutdown. Last time the government shut down, you'll all likely remember that we had a very painful 15 to 20% drawdown in terms of price. Meanwhile, while all of this is happening, the market response to this uncertainty, let's say, has been very, very clear. Capital is rushing towards, let's say, perceived safety in metals as a store of value, not necessarily crypto. So people are rightly questioning the Bitcoin store of value thesis, right? But I should say, but this is a very, very big but. I think that the main confusion factor, at least for me, comes from the fact that if you look at the fundamentals, they're very, very strong. Crypto had its biggest representation this year at the World Economic Forum in Davos. That was, I think, the 19th of January to the 23rd. The world leaders got together, all the central bankers got together, as they do every year, and they spoke a lot about crypto. Now, incidentally, today's guest, Mr. Matt Hougan, was actually there at Davos, and he gave two talks, not one, but two. So I'm super proud to be able to announce that we'll be among the first people in the world to hear from Matt Hougan as to what he spoke about, what he represented, and that's going to happen right here today on The Big Picture. And I'm super excited to chat to him.
Yeah, same with me. He's got such a great lens into what's going on in the macro. And also, Matt recently mentioned that it is alt season in metals right now. So I'm excited to ask him about this, the whole metals versus crypto thesis as well. So this is going to be great.
Absolutely. That whole metals thesis seems to be taking a bit of a hit today as well, right? So again, this sort of market open nuking of price that we saw, I think gold is around $5,100 right now. So it's a $500 per ounce drop overnight, and that's crazy, right? So just again, before we bring Matt on, I think let's talk about that contrast, the sort of confusion for a second. I think it's really, really important that people understand why it's so confusing, right? So Matt's going to talk to us about his takeaways, his experience at Davos. My three takeaways, I guess, from a very crypto native perspective, were that firstly, Trump reiterated that he wants the US to be the crypto capital of the world. He doesn't want China to fill that role. Coinbase's Brian Armstrong was out there sort of defending this idea, defending our rights, if you will, as an industry to compete with banks on stablecoin yields. That's a very interesting discussion. It has serious ramifications for us. Binance founder CZ was out there talking about all these tokenization deals that are ongoing with about a dozen governments. And then the Ripple co-founder, Brad Garlinghouse, I want to say he took it like a step further. And he said, I'm very bullish. And he said, I'll go on record and I'll say that within the next 12 months, we're likely going to see crypto markets reaching a new all-time high. So On one hand, it feels like these big evil banks are sort of delaying the inevitable. And on the other hand, it's really confusing because the fundamentals are as strong as ever, and we have amazing representation at places like Davos. Now, just to go back into the numbers here, over the last 12 months, silver is up 267%. Incredible if you are long silver. Maybe today is going to change the future. Let's see. Gold is massively up around 84%. Copper as well. Nasdaq's up 22%. The S&P 500's 16% up. And then you look at crypto, and the charts are telling an entirely different story. So Bitcoin's down obviously 14%. Ethereum's also down around 10%. Solana, unfortunately, down about 44%. So every other asset class has returned positively, except for crypto. And people are rightly sort of left wondering what's going on. And if you have a lot of Sol exposure, I think you're rightly confused right now, right?
Absolutely. And even short term, we really saw that same pattern repeat last week, right? So crypto sold off hard on tariff and geopolitical headlines while the S&P barely moved, right? So crypto is maturing, and especially with ETFs and asset managers, institutions buying. Yet on the other hand, we're still bearing the brunt of every headline, every bit of uncertainty. Meanwhile, metals and the stock markets are doing great. It's kind of a painful sight when you look at it through that lens, right?
AUM. And I think the main reason why we're chatting with Matt today is because he's one of those rare human beings, right, who can speak our language fluently. Then he can put his suit on and go and represent an institutional asset manager like Bitwise, which manages $15 billion in client assets, I believe. So I'm convinced, I am absolutely convinced that we're all going to learn a lot, both Thomas and I and everyone that's listening, from picking Matt's brain today. Matt, GM, Thomas and I are super excited to chat to you today. How are you? Welcome to the big picture.
Oh man, what a wonderful introduction. I'm so excited to be here. Can't wait to chop it up on Davos and what's going on in Solana. It's great to be here. Great to see you guys again.
Yeah, amazing. Very excited to meet you. Very excited to have you on. And I feel like this is the right time to have you on too. So when we're talking right now, we're talking about the big picture, right? So that's what this show is called. So I'm going to start with a big question. But no pressure, of course. So what we're trying to do with this show is really open up the Solana community to see the big picture when it comes to their trading and investing journeys, right? We really want to help them understand what's going on from a larger perspective. And I really do think that you might be the perfect person to really help us out here, right? In this respect, like, what advice do you have for the Solana community in light of recent sentiment and price action?
Yeah, I mean, when I look at Solana right now, it seems like an incredible opportunity. It'd be sort of to take the big picture view. What we have is an economy that's ripping globally, right? The U.S. Fed GDP now print is 5+%. You have stocks at all-time highs. You have interest in things like gold and silver, as you were mentioning, rocketing higher. And we have crypto that is working through what is effectively a bear market. I think we were in a bear market last year. I think we front ran the 4-year cycle. We completed that last year. So you have these idiosyncratic things that are happening in crypto. It's sort of grinding through the bottom of that bear market where the rest of the economy is just in a different cycle. To me, that looks like opportunity. What I've been telling people is that throughout most of crypto's history, it's been the case that the price has led the fundamentals. The price has been ahead of the fundamentals. When you talk about what's happening in crypto broadly, or in fact, you drill down into Solana, what you've seen are really strong fundamentals and the price lagging. That's painful, but it's also opportunity. So I see it as an opportunity for people who are building positions in this asset, even though I recognize that for those of us who have been holding it for the past year, it has been painful indeed.
Yeah, I would say, to sum up 2025, that kind of encompasses exactly how I feel about it, right? Everything started off on like such a good front. We had, the president launching meme coins. We had positive regulation. We really had everything going for us in the beginning of the year. But if I look back at it, it's hard to avoid the chart going down. But there was so many positive things going on that happened while that chart was going down, right?
That's absolutely right. I mean, massive regulatory improvement, launch of the ETFs, huge inflows. But I do think we were in a full-blown bear market. If you look at the chart of the top 10 assets last year, you had Bitcoin and ETH that did kind of okay. And then you had everything else, which was down 30, 40, 60%, even amongst the most biggest assets of the world, right? A full-blown bear market. If you look at something like Bitcoin, why did it do okay? Well, corporations and ETFs bought 700,000 Bitcoin, right? That's like 4 times the net new supply of Bitcoin. And yet it still went down. We shoveled $45 billion of excess capital above new supply into the Bitcoin fire, and it still barely held on. The reason these other assets, which were in the same bear market, didn't do as well is they didn't yet have the ETF capital coming in. They didn't have the new buyer from the institutional market coming in. I think that new buyer is coming in a big way in 2026. So I'm optimistic that we see better performance across a large number of assets this year.
Yeah, well, and it's firms like yours that stepped in. I mean, you came in as one of the first ETFs for Solana, and you guys have absolutely crushed it, right? I mean, there has been a significant amount of buying ETFs and DATs, right? I think if you look back at the total market cap, I want to say that they have a right around 5% of the outstanding market cap of Solana coins at this point, right?
Yeah, it's been pretty remarkable. I mean, we've had, not quite, but almost $1 billion into BSOL. And I think that will be multiple $1 billion by the end of the year. Solana at 66 billion on market cap. That's a reasonable percentage. And, as mentioned, I used to be the CEO of ETF.com. That's a historic launch. That's a top 1% launch. And the reason for that is Solana is actually an easy pitch to my institutional community. They're extraordinarily excited about tokenization. They're extraordinarily excited about stable coins. They want to invest in those. Solana is the easiest leverage play on that growth. So I think those flows will continue for the foreseeable future.
Yes, and congratulations to you guys on that launch. That is fantastic. And one of the things that I really wanted to get to was, in the Solana community, things move so fast. Meme coins, time duration. Everybody wants a quick flip. Like what I really want to hear is, how do you think about Solana the asset? How do we find good sources of information to look at, rather than just looking at the timeline and seeing somebody make a 10x and trying to copy trade them or something along those lines?
Yeah, I mean, look, you're investing in a disruptive technology that's early in its journey. Sometimes we forget how early Solana is in its journey because it's already a $60+ billion asset, but it's going after a multi-trillion-dollar market. So you have to think of this in the same category you would think of a Series A or a Series B traditional tech investment. So what do you look at there? What is like fundamental data? You need to look at things like developer activity. You need to look at things like non-vote transactions. You need to look at things like the growth of DEX activity or stablecoin settlement or the velocity of stablecoin movement. And you need to look at actually the technical upgrades that are going on underneath the surface. You're not looking, I love Solana's revenue story, but like any Series A, Series B startup, that's less important right now than growth. So when we think about the health of Solana, those are the things we're looking at, sort of daily active users, non-vote transactions, developer activity, shipping cadence, new projects, DEX growth, app revenue growth. That's what we want to see, and that's what we're focused on. And as long as those are moving up and to the right and taking an increasing share, which if you look back at 2025, that's what they did across almost all of those metrics, right? An increasing share of the crypto ecosystem. Then it's extraordinarily healthy. And you can get distracted by price. But again, we're in this market where price and fundamentals are doing different things. To me, that spells opportunity. It is painful, but it spells opportunity. So those are sort of the fundamental statistics that we keep an eye on.
Yeah, it's fantastic. And shout out to SolanaFloor, because that's what we focus on a lot, of getting the key source data out there. But it is hard to really just narrow it down. So if you had to say, what are some of the key sources of information that you would want to avoid? So if you're taking a look at crypto Twitter, you're taking a look at the 1 minute chart, like what's something that you would say like, hey, just stay away from this and you'll probably be a lot more successful?
Yeah, I'm not a trader, so any chart that is measured in minutes is irrelevant to me. I'm investing in Solana for the next 10 years. So look
Yeah.
at a 10-year chart. I mean, uh obviously we don't have those, but look over longer periods of time to see if the trend is intact. And then maybe have a few key fundamental metrics that you're monitoring. I do think non-vote transactions is a good one. I do think developer activity is a good one. I do think app-based revenue is a good one. These will have to evolve over time as the protocol evolves, but I think have a few of those. Look at maybe a good metric for the community is you should look at that data as frequently as you look at price. So if you think about yourself over the last week, how many times did you look at price, and how many times did you go and research stablecoin AUM on Solana or DEX activity on Solana? If you equalize those, you would have a better mental framework for the health of this asset long term. But my guess is most people are like 100 to 1. And that's sort of the break you have to make if you want to think as a long term investor in this space.
Oh, that's
I
so
think
well
that's
said.
really, really, really well put. We do our best at SolanaFloor to share all of those key metrics and try not to focus exclusively on price, but as we saw with the price of gold today, when it makes these insane moves, it's difficult not to get sort of blindsided a little bit. I know you tweeted recently as well about the market cap of gold increasing by almost the entirety of Bitcoin market cap in the short space of 24 hours. So these things are wild to us. And again, it's very, very difficult to not get sort of blindsided by them as well. But Matt, just before we get too lost on price here, I want to address the elephant in the room. We mentioned earlier that Bitwise very cleverly launched BSOL during a government shutdown. It's now the most successful Solana ETF. So congratulations again. And I think you're the right person to talk to about this, because markets seem a little bit confused as to whether or not we're going into another government shutdown. The odds were at 80% on Kalshi, and I think similar on Polymarket. They've sort of come back down to around 50%. Looks like it's a bit of a coin toss. How do you feel about a potential government shutdown this weekend? And I guess more importantly, have markets priced that uncertainty in already? Or do you think we're expecting another sort of price shock?
Yeah, I don't know that they've priced it in because I think it is still uncertain. They tend to price it in when they have confidence on which direction it's going. As you mentioned, Polymarket's roughly at 50%. So I do think a government shutdown, particularly if it is prolonged, could be a negative shock to the markets. I'm feeling relatively optimistic. Look, I'm not a political tea reader, but what I've seen is something unusual for the Trump administration, which has been a little bit of backpedaling on ICE and its positioning there, which suggests some openness on the issue that will determine whether we enter a government shutdown. I think the reason it was at 80% beforehand is that the Trump administration wasn't making any movements, and the Democrats were digging in on not approving funding in any way, shape, or form. We've really seen both of those sides come together over the last few days. As long as that keeps happening, my expectation is the government won't, in fact, shut down. But this is Washington, so things can change in a heartbeat. If it shuts down, I do worry about a price setback because I think people will assume it will last for a relatively long time. But my base case right now is actually we're going to avoid this, and the government will stay open.
Fingers crossed. I certainly hope that is the case. And you touched on DC there and how, basically one statement can have a serious impact on the price of risk on assets. Now, I think part of the reason why we launched this show as well, and we wanted to sort of paint the bigger picture for our audience members, is because we see that a slight shift in rhetoric and a slight shift in the way people are tweeting, whether it's on X or on Truth Social, can have a significant impact on us, on our mental health. So I'm curious if you agree with the idea that as we get closer to, let's say, the midterms, right, very, very significant, very pivotal event on the political calendar in the US, do you suspect that more rhetoric from DC is going to have an impact on crypto specifically, or do you think it's going to get amplified in essence? How do you see that playing out between now and November?
Yeah, great question. A lot depends on whether or not we get the Clarity Act going through Congress before then. I think that's really the focus of the crypto industry right now, is whether we can get that approved. If we get toward the midterms and that's not yet through, then I think we'll be very responsive to tweets in Washington, to positioning from Democrats, et cetera, because we'll be starting to look past the midterms for will we ever get that piece of legislation. My hope is we see real progress on the Clarity Act over the next couple of months. It's certainly trending in that direction. You see the polymarket odds up at 62+%. You have the crypto industry with, I think, the largest political action committee funding ever starting to really push on that. So look, if we get clarity through, let's say by the end of Q2 or in July, then I think crypto will look past the midterms. I don't think it will be that important. We'll have that firm regulatory environment on which to build. If we don't get clarity through, then I think it'll be sort of a rocky summer because people will be very worried about the midterms and monitoring that tweet by tweet, as you say. So let's hope we get it through in the next couple of months so we can sort of build this industry without worrying so much about what's happening in DC.
Yeah. And so speaking about Clarity Act, right, this was, major legislation that we were going to get passed, regulatory clarity for crypto. We've been looking for this forever, right? It's always been a gray area, especially in the US where I'm based, but it looks like banks just completely railroaded the whole thing, right? They kind of took it over, and then Coinbase came out against it, and they were, one of the main proponents of it originally. So, it's in a tough spot right now where it's all coming down mainly to interest on yield. Is that right? Is that what you think it's coming down to? And tell us your thoughts.
Yeah, there's sort of two dividing issues. There's whether you can pay interest on stable coins, and the big banks don't want you to, and crypto very much wants to in some format. And then there's question about how liability plays through to developers in the DeFi ecosystem, which crypto wants reasonable sort of First Amendment style protections. And part of the Democratic wing wants more responsibility and legal liability. And those are the two big challenges. Just to tackle them, look, the reason banks don't want stablecoins to pay interest is because ultimately, to go back to like an original crypto talking point, unfettered and well-established, crypto will put banks out of business, right? A stablecoin is a better offering than a checking account or a savings account. And so they're very afraid of this. Now, this won't happen overnight. It'll happen over a decade or two, but they can see that coming pretty clearly, and that's why they're fighting against it. Ultimately, my view there is that crypto will win. The analogy I like to make is to Uber or Airbnb, which were both basically illegal, but people wanted them so much that the regulations eventually bent to them. I think the question with the Clarity Act is, will we bend to them now, right? Is the retail demand and the crypto demand enough to unlock interest now? Or do banks sort of hold them off for another couple of years? I actually think that's what's at stake. The ultimate journey is clear to me. Stablecoins will pay interest eventually in one form or another. Crypto wants it to be sooner. Banks want it to be later. I suspect crypto is going to win this one in some format. There's going to be a way to pay interest because the crypto lobby is so strong. On the DeFi side, it's actually really important to the future of DeFi. Sort of determines whether we have a vibrant DeFi ecosystem or it's operating in the shadows in the US and mostly taking place offshore. Again, I actually think crypto will by and large win that argument. I think the alternative to that is Democrats dig in against the Clarity Act in general and tank it. I don't think the crypto industry will accept strong sort of negative anti-DeFi provisions in that. It would rather just scuttle the bill. So I think that's what we're going to see. I'm feeling optimistic about Clarity in general. It won't be a perfect bill, but I think we'll get some form of interest payment. I think we'll get enough DeFi protections to continue to build. And I do actually think it will make it through, but it's not, it's DC. To go back to that, there is still uncertainty.
If you don't mind, I just want to hop on that. I love your Uber analogy there, and I do, by and large, share your optimism. But the one thing that sort of keeps popping up in my mind when we think about this optimism and the way banks have blocked essentially the stablecoin yields for consumers is, as you've pointed out, it's rather anti-consumer. But going back to that Uber analogy, I think the taxi lobby, for instance, back in the day in the various countries that Uber was sort of operating in the shadows for a while before it became fully legal and regulated, in my mind, they didn't have $100 billion of annual profits a year with which to lobby the governments, right? If you look at the top 5 US banks now, they have, I think, together about $100 billion of profits, and they have both the means and the desire, and the ways of doing it, also lobbying governments. To what extent do you see, I guess, that $100 billion of profit giving them more of a motivation to go and lobby? And they argue it's an existential threat to them. I don't necessarily see it that way. Cry me a river, you make $100 billion a year. Let people have stable coin yields. But is that more of an existential threat for crypto, for instance? Do you see a scenario where they use that power, lobbying power and financial power, to essentially just derail this indefinitely?
Yeah, that's what they're trying to do. I think there is a risk of that. I think one protection we have against that is sort of the tragedy of the commons, which is an old philosophical argument that if one person can benefit from doing something first, even though it harms the group, that person will inevitably do it. In this case, what I mean is, look, the banks are looking at Tether, arguably the most profitable company in the world, and they want a piece. So does Jamie Dimon really want to wall off this enormous global growth and the profit opportunity there, even though it harms the industry as a whole? Does he think he can benefit from it? Does Bank of America think it can benefit from it? Do these other large institutions think, even if it hurts banks as a whole, will they benefit from it? So I think ultimately that sort of self-centered individual profit protection means that you won't have the full force of the banking industry fighting against this. I think you'll start to see defections. You may even see those underneath the surface. Maybe that's a little Machiavellian, but I think Jamie Dimon is pretty Machiavellian. And I suspect that that's happening under the surface. They sort of can't resist the profit opportunity in this space enough to stay cohesive. The banking lobby is going to put up a fight. Again, I think they're going to try to slow it down, but mostly to slow it down until they can enter it. Because in the end, this is a much bigger market, right? This means JP Morgan can bank the world, not just the US. And it's a really big opportunity. So I think that's why I think it's inevitable that we'll get there. But you're right to point out the banking lobby is a big deal, and they're aligned against it.
I guess, is it the biggest threat that we face? Not to really sort of belabor this point, but okay, clarity is delayed. The midterms could sort of compound that risk for us. But are big banks the biggest threat that the industry faces right now as a result of that ability that they have and the desire that they have to sort of derail, however temporary, the Clarity Act passing?
Yeah, I mean, I'm an optimistic guy, but if you want me to go in my nightmare scenario, the nightmare scenario is that Clarity doesn't pass, and the Democrats win the midterms, and then we end up in 2 years with a new administration that puts Senator Warren as the chair of the SEC. So if you want to go into a dark place, just imagine Elizabeth Warren as the chair of the SEC. The regulatory progress we've made in crypto so far has been really substantial under Atkins, but that can be reversed, right? Atkins was very different than Gensler. There's no guarantee in a new administration that we don't get someone who's very different from Atkins. Atkins is the current chair of the SEC. Gensler was the previous chair. And the reason legislation is so important is it constrains what that next chair of the SEC can do. It creates a minimum floor. It creates a strong foundation on which you can build. I've been sort of called out in the industry. I wrote a CIO memo about this, saying it's really important that we get some form of clarity done, because otherwise we're exposed to this nightmare that I have periodically of Elizabeth Warren as the chair of the SEC. We're probably not going to end up there. I think the Uber analogy is right. I think crypto will have so many users in 3 years that they won't be able to put the genie back in the box. I think stable coins will be through. I think tokenization will be through. But that's the dark scenario that we're worried about. And so, yeah, the threat to crypto right now is the banking lobby makes it impossible to get clarity through. And therefore, the regulatory firmament that crypto is building on becomes a little bit looser. And so we slow down and we don't get that real world adoption to cement it before the next administration. And I think that's a meaningful risk.
Yep, I certainly share your optimism on a sort of longer time horizon. But then before we get to Davos here, on a brighter note, let's inject some optimism back into the audience here. We're seeing sort of a massive and I would argue increasing divergence between assets like the stock market, like metals, which were at all-time highs. Well, gold was at least until this morning, and crypto, which is going through this sort of correction at the moment. Prices are lagging fundamentals, I think, is a good way to sort of be reductionist about it. What's going to save retail in 2026 other than clarity passing and hopefully us being able to sort of put that nightmare scenario of Elizabeth Warren running the SEC behind us?
Yeah, I'm sorry I put that into your mind. You could try
I
to
will
watch it
lose
out.
sleep about this. I certainly will lose sleep about this, Matt.
I don't think it's the base case. What will rescue retail? There are two things that I think will happen regardless. So I'm optimistic, even if clarity doesn't pass, I'm optimistic we get a bull market year. One is the underlying fundamentals and growth is just really strong, right? Stablecoins are really growing. Transaction activity, even ex crypto, is really growing. DeFi activity is being reborn. The entrepreneurial energy in that space is better than it's been in many years. Tokenization is really taking off. So you have fundamentals improving. They're already ahead of price and they're improving at an accelerating rate. I just think that is true. At the same time, I think you have a really strong sort of reflationary case in the broader economy. Crypto generally does well in periods where the economy is risking and people are getting risk on and the economy is reflating and there's increase in global M2. All of those macro statistics that we're looking at right now are really strong. We just had sort of our CIO meeting yesterday with the team where we reviewed this, but US economic growth is really good. Global M2 is really good. Dollar is generally down. Stock markets are at all-time highs. These are kind of markets where you get real risk on sentiment that starts to spill into crypto. And I do think once you see prices bottom and move up, this becomes a reflexive trade because it has to catch up to those fundamentals, which are so much further ahead, right? Solana should be twice the price it is today, and it has to accelerate up to that and then past that. So I'm bullish on the economy broadly. I think that's going to spill over into crypto. And then I'm bullish on crypto fundamentals. And I think at some point they become too obvious to ignore. I think that's the story that we'll get to later in the year. Whether we get to it in Q2 or Q3 or Q4 depends a bit upon clarity. But I do think that's where we're going to be this year.
So just very quickly here. Sorry, Thomas, if you don't mind me asking, something just popped into my mind that I feel like we should have asked earlier. And I think if we sort of gloss over this, people are going to be very upset with me. So correct me if I'm wrong here, Matt, but we're talking about sort of prices not necessarily reflecting fundamentals. And I think one thing that also fits into this is that the Bitcoin store of value thesis is also maybe not necessarily reflecting the fundamentals there, right? So correct me if I'm wrong here. You guys launched a Bitcoin plus gold ETF. Is that correct?
That's right. Yeah, it holds.
So does that then reflect sort of a growing appetite for TradFi institutions, people that you partner with, saying, no, we do believe both in gold as a store of value and as Bitcoin as a store of value? And can you talk to me a bit about the sort of logic behind launching a Bitcoin plus gold ETF? Sorry, this came from the community and they were sort of quite adamant that I had to ask you. So slip that in there.
Yeah, I love it. Look, I think investors everywhere are worried about debasement and worried about fiat currencies. You don't have to ask me. You look at Harvard Endowment last year. They put on a big debasement trade. They bought a Bitcoin ETF and a gold ETF. They're now the two largest publicly traded tickers, I believe, that Harvard owns. Harvard's thought of as maybe one of the most institutional, well-managed, august portfolios. They've realized that they need some exposure to these hard assets, and their choice was not to pick one or the other, but to own both. So the idea in launching this fund, which holds Bitcoin, it holds gold, it holds silver, it holds gold miners, is every investor needs some protection against fiat debasement, right? Most investors are 100% exposed to fiat assets. They need some exposure to these hard assets. And why are you going to pick and choose? Why not just own both of them? Who knows exactly how this plays out? Bitcoin was ahead of gold for a while. Gold is ahead of Bitcoin right now, but they're both crushing the dollar, right, over any meaningful time period. And so just own both. Like, take the John Bogle, founder of Vanguard, founder of index funds, just own the thing, and don't try to be too cute. I think we're seeing that at retail levels. As I mentioned, we're seeing that at Ivy League endowments. I think we're going to increasingly see that at central banks. I think people are just going to own both of these things, and that's great. I think that's good for investors.
Yeah, I'm a huge fan of your theory for gold, and it's not even a theory; it's what happened, right? Central banks have been buying more gold. It was it was 400 tons before 2022. The U.S. kind of weaponized the dollar a little bit against Russia once they invaded Ukraine. Central banks started buying 1,000 tons per year after, and then you really saw the price take off. A few years after, they were accumulating, and going up. Is that how you see crypto going right now in general, right? You see Harvard buying both gold and Bitcoin. Do you think that that's going to be the direction that they're going, right? They're already loading up on gold. Is Bitcoin going to be next, or is it ETFs that are the ones that are really going to be buying that?
No, I think you're gonna start to see central banks and real institutions join retail in buying Bitcoin. One, because they want to diversify beyond gold. I'd also add, I think they will realize eventually that Bitcoin has a fundamental advantage over gold, which is gold you can hold in a self-sovereign format while you hold it. But as soon as you want to move it, you lose that ability to self-custody your gold. You have to put it on an airplane or a ship and send it somewhere. You have to store it at a centralized vault, and then you have to rely on that. With Bitcoin, you have self-custody through settlement. You have self-custody when you hold it, and then when you send it, you have self-custody until the minute it goes to somewhere else. That's as people start to worry about trusting other institutions to hold their wealth. I think they'll increasingly realize that Bitcoin's ability to protect on that is actually significantly bigger than gold's ability to protect on that, because it extends through settlement. So yes, I even think the largest institutions will want gold and Bitcoin because they want to diversify, because the demographics are on the side of Bitcoin long term, but also because it's actually fundamentally better from a self-custody perspective. For what it's worth, that's true as well on tokenized stocks and on stable coins. The ability to sort of custody your own wealth, to have non-custodial control of valuable assets, is maybe most talked about on Bitcoin, but it's actually true on these other assets that exist in other ecosystems as well.
Yeah, and we're seeing an incredible growth in RWAs. Quick shout out to Remora, but yeah, I mean, tokenized stocks, tokenized metals, having a better way to move them is, it's pretty transformational, right? But I feel like it's the shift from gold to Bitcoin is what I want. I would really love to see, a big shift, whether that's a central bank buying or whether, I mean, seeing Harvard doing this is a great start, right? That's almost like, it's like, hey, we're announcing this, we're doing this. That almost like gives other people the okay to move into it, right?
That's totally right. For a little bit of asset management history, and the reason I brought up Harvard is because the whole reason hedge funds are really a big deal now is because Ivy League endowments embraced using hedge funds in a diversified portfolio. Before that, almost no one had exposure to hedge funds. Yale came out and said this is a big part of how you should build a diversified portfolio. And then 20 years later, everyone was doing it. I raised Harvard because those Ivy League endowments are often seen as the leading light of the institutional world. And if they looked at sort of fiat concern and said, actually, we want Bitcoin and gold, that tells me that over the next 2 years, everyone is going to do that. I do think it'll include central banks. We were meeting with a central bank earlier this month that was talking about Bitcoin. I suspect I'll do 5 or 10 of those meetings this year. There is real interest. They just move very slowly, but for sure, you should look at the gold. If you're a Bitcoin fan, you should look at the gold move and smile. It's increasing the addressable market. I think over a long enough time frame, Bitcoin will be bigger than gold for the reasons I outlined. It's a superior technology. And so you should just see that as opportunity in the long term. I know it's easy to be jealous, but for me, I look at that and I'm actually pretty excited.
Just want to hop on that there. The optimism is definitely contagious. You mentioned central banks. Incredible that you guys are able to sort of represent the industry. Talking to central banks, I know you were at Davos about a week ago. where all the heads of central banks and heads of state meet every year, and they talk about the sort of future of the world. They talk about the past, the present, and there's a lot of confidence there that they really set the agenda for what's to come, right? And I think what surprised me was the sheer attention this year on stablecoins, on crypto in general, and how these sort of large banks, we talked about some of them, JP Morgan and such, are going to react to this growing appetite for crypto as well. But you were there. I think you actually gave 2 talks at Davos, if I'm not mistaken.
Right.
So I'm curious if you can share with us some of your takeaways. Who did you talk to, unless it's really confidential? But what were your sort of main takeaways from Davos last week?
Yeah, I think what you raised is incredibly pertinent. There was you couldn't go anywhere without talking about stablecoins and tokenization. I would say the 4 big topics in Davos were AI, Greenland, stablecoins, and tokenization. And I say those words and they don't sound weird, but I would remind everyone who went to a crypto conference in like 2015 what that experience was like. And like a few people wandering a conference hall and a bunch of strange, unusual, non-mainstream people. And now there are 4 topics at Davos, and crypto is 2 of them. I mean, that alone maybe is the biggest takeaway. In terms of what I gathered that may be non-obvious, Davos is a heavy European contingent. I know we think of it as like a World Economic Forum, and it is that, but of course it's located in Switzerland. So the percentage of people who are European that you run into is really very high. One takeaway was I experienced pretty severe fear about dollar-based stablecoin growth from the European market. I've always thought of dollar-based stablecoin growth as disruptive to emerging market currencies, but I felt palpable feel from European banks about dollar-based stablecoin growth disrupting European monetary systems. And I think you're going to see responses from Europe on that. I think you'll see big pushes on euro-based stablecoins. I'm not sure that those will be successful, but that was not something that was in my mind when I went to Davos, and then exiting it. It was something that I was aware of is now a pressing theme amongst the banks there. I would also say on tokenization, it's just accepted as fait accompli. Everyone there is certain that all assets will move over tokenized networks in a short period of time. There's not debate. There's even debate among stablecoins, right? We were just talking about interest income. I think a lot of people wonder, will stablecoins be a niche application or the main way that money moves? My view is they'll be the main way money moves, but there's still people who wonder if they're just a niche application. Tokenization is not that. The assumption on tokenization is that it's game over. It's just a matter of time. It's equivalent to when we went from like phone-based stock trading to digital trading, and that felt certain before it was reality. I think there is a huge amount of certainty around tokenization. So I actually left more bullish on tokenization. In terms of who I meet, yeah, go ahead.
Pardon, continue. I wanted to hear about the specific talks that you had and who was interested in those. Was it sort of a closed forum environment? Were they televised? We did some research, but we couldn't quite find who you were talking to. So I'm curious what those conversations evolved around as well.
Yeah, no. They weren't televised. They were actually at 2 ends of the spectrum. So one was sort of like a talk to the crypto degen community within Davos, which was a lot of fun. And they wanted to basically know, from my perspective, what it's like to meet with institutions. They wanted that view of what the meetings were like, what the questions they were asking. Are they concerned about quantum? What's preventing them from allocating? How fast are the allocations coming? Will they continue? So that was like a side event at Davos of just crypto native people who were hiding out amongst the world's elites. And then the other event was a sort of an institutional gathering about crypto specifically. And that room was filled with some pretty big people from the world's largest banks and some of the world's largest real institutional investors. So think of people that are managing hundreds of billions of dollars or trillions of dollars. That was the gist in that room, from sort of the more august side of the institutional spectrum. Institutional investors range from like a mom and pop advisor who manages money for 100 clients to CalPERS, which manages money for all the teachers in California, right? That's sort of the spectrum. And this room was at the pointy end of that spectrum. And it was full, standing room only. I can't share names because it's all Chatham House rules, but They wanted to know about stablecoins and tokenization and access vehicles and how they're improving. They asked about the Solana ETP for what it's worth in that room.
Oh, that's so awesome. I love that the crypto degens have infiltrated Davos. Like the idea of that happening is wild to me.
It was there. It was in a small small room, not that small. There may be 150 people there. But yeah, it felt like a DeFi conference hidden amidst Davos. So that was pretty fun. But they're there.
That's so amazing. So when we're looking at the bigger picture, we now have crypto degens in Davos. So when you're there talking to them, is there anything, Solana specific that you're talking about? I mean, clearly you have one of the most successful ETFs, so I'm sure that you're talking about that. Or like, what are the talking points when it comes to Solana specifically, to kind of bring it back?
Yeah, Solana specifically, I think people are interested in how the institutional reception of the Solana ETP is, right? I'm always conscious when I go and speak in rooms that the unique thing I can bring is not technical expertise, is not on the ground meeting with the people building the Solana ecosystem, although I do that. But it's the 15,000 meetings a year we have with financial institutions to talk about crypto. And they wanted to know what the reception was for Solana, what the pitch is. I think I've shared this with you. My core pitch on Solana is that you make two bets at once. One is on the bet in the growth of stablecoins and tokenization, which is an easy bet that every institution wants to make. And then the second bet is that Solana will take an increasing share of that. And so they want to know how I substantiate that. And you can substantiate that just with data. Look at the growth of stablecoin AUM on Solana last year. It was up like 150%. The broader stablecoin ecosystem grew like 50%. It's 3xing the growth. That's a pretty good story. You can make a similar story about app growth, revenue growth, and DEX growth. And when you combine those two, an underlying market that's growing aggressively and then an asset that is winning share, that's a really attractive audience. So that's what I gave to that community. I think in terms of what I learned from it, I was there to meet people doing interesting things in the space, interesting startups, and I was really impressed. Again, unfortunately, can't talk about any names, but I was really impressed with the caliber of people building in the ecosystem, including on Solana.
Amazing. And now I have one follow-up on that. Can you explain the $1 trillion market cap prediction for Solana? I heard you say this. I got super excited. I'm still kind of buzzing about it. So I need to hear it explained a little bit more. How do we get there?
Yeah, look, if Solana is the way all the world's assets move, opportunity in tokenization, just to put numbers on it, what's the RWA count right now? It's like $20 billion. Stocks are 110 trillion, bonds are 180 trillion. Real estate is even more than that. I can't even do the math to get from $20 billion to something like $500 quadrillion. If you have $500 quadrillion moving over a network, then the value of that network is extraordinary. We're working on a paper this year that talks about how you back into those actual valuation metrics. But I would encourage people to keep in mind that my framing of this is like Series A, Series B startup land. And in Series A, Series B startup land, you're looking at something that's going to grow exceptionally, but the price to revenue multiple could be $1 trillion. Like it's almost irrelevant. All that's relevant is growth. So the $1 trillion market cap is just thinking about the scale that's coming, looking at the market cap of existing financial institutions, sort of reducing that a little bit for efficiency, but then growing it because I think the scale of financial activity will, 5 to 10x as it gets more efficient. And you just end up with very, very large numbers. I don't know how many, where it ends up, but $1 trillion seems easy to me if it succeeds at its goal.
Well, we love to hear that optimism as well, and it's good to know that there is a reasonable path there, and the numbers do sort of make out in the grand scheme of things. But I want to zoom in ever so slightly, and I want to ask you for some, advice here, because we're looking at this generational metals rally. Stock market again is at all-time highs. I guess it sort of changes the picture when you factor in dollar weakness. But there's a lot of people in the sort of crypto industry that they saw 2017, 2018, they saw so much wealth being created. They thought, I'm going to get involved. Then, sort of disappointing 2024 to 25 happened. DeFi summer didn't necessarily work out for them. Maybe they lost a bunch of money on NFTs, on meme coins, and now they're sort of looking at gold and silver and thinking, shit, I'm sidelined. So I think there's plenty of people out there that are maybe too exposed to assets like Sol, and they're looking around thinking, we deserve nice things too, right? So Matt, for all of those members of the audience, when might they see this rotation happening from metals, from the stock market? When will they see all-time highs again, do you think?
Yeah, I think so. The right mental model is, if you've been in crypto for a while, is to think of early 2023 or something like 2019. I do think we've lived through a bear market. I think the bear market was papered over by institutional capital coming into the large cap assets, particularly Bitcoin and ETH via ETFs, which were the only ETFs that were available. Absent that, we would all be talking about the giant bear market of 2025, where the crypto market retraced 40%, right? So absent this one-time institutional investment and this sort of DAT investment, we would be talking about 2025 the same way we talked about 2022 and 2018. So the mental model you have to put yourself in is early 2023 or 2019. If you put yourself in that model, you'll remember that we didn't go straight up to the moon. Bottomings are rounding processes that are painful and that wear you down and that make you very tired. If you are feeling tired and you are feeling worn down, that is the right place to be. I definitely remember sort of some very dark days in 2019 when Bitcoin had fallen from $17,000 to $5,000 and then treaded water and then fell to $3,000. It was like, oh my God, how much pain can we take? But as long as the fundamentals are there, you eventually round and get and go back up. When will we get to new all-time highs? I think in part it's contingent on the Clarity Act. I think if we get the Clarity Act passed, crypto will pull forward a lot of expected value from stablecoins and tokenization, and we'll see quick accretion of prices. If we don't have it, I think crypto will wait until sort of the fundamentals of the space are so unavoidable to start pricing in that value. I think we get to the same place eventually because I think the technology is inevitable. But I do think the Clarity Act will tell you whether we're getting there in like Q3 or we're getting there later on. So I can't give you a specific date because it's contingent, but I do think the fundamentals are moving in that direction.
I think Thomas and I both share your optimism and generally that sort of roadmap as well. We are unfortunately coming towards the end of it. I would like to keep you here all day, but I know you're a very, very busy man. There's 15,000 clients that want to chat to you and want your time. I was planning on asking you, just as we sort of wrap this up, when you think we'll see a bit of a blow off top with gold, maybe silver following. But then just, I want to say maybe half an hour before we hopped on this call, prices started tanking. So gold went from 5,600 an ounce to about 5,100 an ounce. Is this the beginning of something not so great for the metals rally, or do we expect this to be a sort of a temporary top, a local top, and then we'll continue seeing that metals rally throughout the rest of 2026 as the dollar debasement continues?
Yeah, great question. I mean, I had an Uber driver ask me if he should buy silver the other day. So that tells me we're pretty close. Our own indicators says there's still like room for more ebullience in things like silver. I think gold may be closer to a near-term peak. The debasement trade is going to be with us for years. So even if we calm down, I think long-term these assets will be good. But yeah, we might be in the altcoin part of the market in metals. If you haven't allocated yet, I don't know if now is a short-term great time. Long enough time horizon, it'll be fine. But yeah, I don't know. Maybe we've seen the peak. I'm not sure.
Very interesting. Now, unfortunately, that is all we have time for. Matt Hougan, I want to thank you so much for joining us on The Big Picture. I really appreciate your insights always. I know Thomas does. I'm sure most of our listeners have got some great takeaways from this as well. It was great to chat to you also at Breakpoint, and I'm sure we'll have an opportunity to chat with you in the near future as some of these ideas play out. Maybe some of them don't play out. Maybe it's slightly a longer time horizon than we expect it to be. But ladies and gentlemen, Matt Hougan. Matt, thank you so much for joining us.
Thanks for having me, guys. Appreciate it.
Thank you so much. We really appreciate it.
All right. Now, TB, Mr. Thomas Bahamas. How was that? How amazing is Matt Hougan, dude?
Oh, man, he is so awesome. It's like he is the one that you want to hear talking about crypto, especially, he was at Davos. He's talking about the big picture, with world leaders. This is all the biggest players in all of finance, right? These are the biggest banks in the world. It's everyone. And he's talking to Solana, and the crypto degens have infiltrated them. It's fantastic.
That's what I wanted to mention as well. At the beginning, we said, Matt is obviously the ideal candidate to sort of paint the bigger picture, because he's a sort of crypto native when he talks to us, and then he goes and puts his suit on. But I hadn't quite realized to what extent that was true, because he's at Davos with world leaders, with central bankers, and he's giving 2 talks. One is crypto degens, and the other one is central bankers and trillion-dollar asset managers. I don't think there's too many people, maybe a handful of people in the industry that can willingly do that and do it well as well. So I'm honored that we had Matt Hougan on the first episode of The Big Picture. I know we'll be keeping in touch with him on his many ideas going forward. Reminder, Bitwise launched BSOL, the most successful Solana ETF so far, nearing $1 billion of inflows. So do go and check out those guys. They're doing amazing things. And I think sort of looking out into the next 6 to 12 months, it is absolutely clear to me that crypto is not just a side conversation that's had at these economic forums. It's thrilling to see that it's 2 out of 4 of the sort of key discussion points. Trump keeps talking about crypto capital of the world being the US and not China. We have a whole host of hurdles, shall we say, to get over, but I'm sure they will be dealt with promptly as well. And I'm delighted that Matt thinks fundamentals are where they need to be, and price is inevitably going to catch up to those fundamentals as well. So that's super exciting. I guess we're all watching metals for the rest of the day.
Yeah, I guess so. I mean, I don't even care about metals right now. I'm so bullish right now. I don't want to think about the short term. Think about it, as an investor. And I'm really glad that we actually have people like Matt Hougan in crypto. Absolutely. Because he's able to really bring things down, like get through all of the noise and get straight to the signal. And he's just a great communicator about it. So, I mean, to have him on the first episode of The Big Picture, it's like a dream come true. I love it.
What an honor. What an honor. All right, ladies and gents, that is all we have time for today. Now, if you do enjoy hearing from Matt Hougan, then you'll be pleased to hear that we have a very, very long list of experts lined up for you that are going to be joining us on future episodes of The Big Picture. Don't forget also, I should plug this, we have our weekly news recap that's happening tomorrow. It's also a live stream. You can hear all about the top stories that are impacting not just crypto and not just Solana, but the entire digital assets industry. The newsletter is written by our senior journalist, Finn. So if you want to front run that live stream, you can, of course, go to SolanaFloor.com and subscribe to the newsletter. It is juicy, it is spicy, and I'm sure you will learn a lot from that as well. Next week, we're going to be joined by Thomas Cohen. We also spoke to him at Breakpoint, but he's the head of tokenization at Galaxy, which, as we all know, is one of the biggest players in the industry. So set your reminders for that. It's going to be next Thursday. And if you have any questions for Thomas about tokenization, about RWAs, about on-chain equities, about Galaxy's plans, I'm sure he's the man to ask. So drop them in the comments for us, and we will do our best to raise them with Thomas Cohen next week as well. And with that, I will see you next Thursday at 11 a.m. ET, same time, same place, for the next episode of The Big Picture. Thomas, GN.